Welcome to your weekly market update. The volatility has continued. Crazy, but fun times to follow in our economy. And what we know with volatility is it will calm down. I'll make some predictions on that. So I wanted to share a couple of things with you that we continue to talk about. Number one is rental prices. So this is the shelter component of consumer price index. Consumer price index measures inflation. It's the Federal Reserve's other report that they look at besides the producer's price index. So let me just kind of break this down what's happening, right? Think about rental costs. Rental costs and shelter are 43% of our expenses in our country, right? So almost half. When you look at this, the year over year average is 7.9%. Now, remember, it was high as 18%. Rents are usually signed, leases are signed on a 1-year lease, right? So when you look at these for 1 year, people are being surveyed here, right? And it takes a while to bring down this yearly average. So you still see it going up. It's about a year behind. So what do we see the beginning of, like right here? That's May, right? So the May of 2022 should come out in May 2023. So when people sign new leases and the rental costs get reported, we get the real-time data. So real-time, we're at 3%. The year-over-year average is 7.9. So rents aren't going to continue to go up. They're likely to hold firm or come down a little bit. That is happening real time. So when you really factor this in and you look up here, CPI, once this is all pulled through, once again, circle the date, May 10th, we believe that's when this will all get pulled through. We're actually 3.5%. CPI, not the 5.5% recorded right now. So mortgage rates follow inflation. May 10th, you're going to see rates come down. I have a lot of people asking if I should wait to buy then. If I'm a buyer right now, I'm trying to get under contract. I'm trying to negotiate the price. I'm trying to do everything I can to get the place. When rates are up, I would be aggressive because that's when everyone else falls out and there's not as much competition. The price that you get the home for is permanent. The rate is temporary. This will pull through by May 10th. And after that, I think we'll have a lower interest. I know we'll have a lower interest rate environment the second half of the year. Let me show you one other part. This is, so the media is reporting, of course, doom and gloom, home prices going down. When we look at this, this is what they're reporting, right? So they're reporting, Case-Shiller is a national report that measures home prices nationally. Then they do the 20-day major metropolitan areas. I like to focus on the FHFA. These are financed homes on a conventional loan, right? So when you look at this, this is the month over month. This is the yearly average, right? Or this is the yearly average, excuse me. This is the seasonal adjustment. Real estate is I always say we're like landscapers. From about March to October, we're going to be really busy. We're kind of laid off during the other time of the year. We're just slower, right? So there's a seasonal adjustment, and they're much better at Case-Shiller on the seasonal adjustments than the government is on the jobs data that's been skewed immensely. And you'll see that come out, the truth, the next couple of months on their revisions, right? So when we look at the seasonal adjustments of 0.3%, 0.5% down, 0.1%, that's nothing, right? So I like to look here. These are most of our clients. These are conventional loans. Think homes that are selling between 200,000 and about 775,000. That's here. That's most of the area that we deal with. That's probably most of you watching this, right? Year over year, those home prices are up 6.6%. And with this seasonal adjustment, they're only down 0.1%. Remember, home prices have ran up 121 months straight. So to just have this pullback just speaks on the strength of our housing market. When you look at nationally, these are declines from the peak, right? Seasonally adjusted, we're down 2.7%. Remember, home prices in some areas have ran up 60%. To just pull back 2.7 is amazing. So you have cities like San Francisco and Seattle, they have had year-over-year declines. They are seeing some discount for cash, but keep in mind, these are higher priced homes for the most part. That is not here. That is not most of our country. So remain diligent on your search. Get in the property now, temporarily pay the higher rate. We'll be refinancing you end of the year into 2024. Remember, I'll do that for you for free. This is your weekly market update. Give us a call if we can help you, 312-731-4939. Chad Lubin, thank you for watching. Get us anytime, 312-731-4939.